What if I told you that the house you live in doesn't actually belong to you, even though your name is on the deed? I know that sounds absurd, maybe even offensive. After all, you worked hard for that down payment. You signed the papers. You pay the mortgage every single month without fail. But here is the uncomfortable truth that most people never stop to consider. Ownership in the modern real estate market is far more illusory than we've been led to believe. And the forces controlling the game, they're operating in the shadows, beyond the reach of your awareness. Have you ever wondered why housing prices seem to defy all logic? Why rent keeps climbing even when wages stay flat? Why entire neighborhoods transform overnight, pushing out families who've lived there for generations? These aren't random market fluctuations, they're not accidents. They read the result of a carefully constructed system, what I call the invisible architecture of global finance. Picture a chessboard. You're sitting at the table, convinced you're a player, but the reality is far more unsettling. You're not a player at all, you're a pawn. And the real players, massive investment funds, institutional landlords, and transnational capital networks, they're moving pieces across that board without you ever seeing their hands. And they decide which neighborhoods become hawked. They determine when prices rise and when they crash. They profit from your rent payments while you struggle to build equity that somehow never seems to materialize into true financial freedom. Stay with me until the end, because what you're about to discover might fundamentally change how you see the roof over your head. This isn't conspiracy theory. This is documented reality hidden in plain sight. In the past 2 decades, the real estate investment landscape has undergone a transformation so profound that it has essentially rewritten the rules of property ownership. Wall Street discovered that residential housing wasn't just shelter, there was an asset class ripe for extraction. Suddenly, the family home became a commodity traded on global markets. Your monthly rent became a line item in a quarterly earnings report read by shareholders in London, Singapore, and Dubai. The invisible architecture I'm talking about operates through complex financial instruments, through REITs and private equity portfolios, through algorithms that analyze your neighborhood's investment potential with cold, calculating precision. It operates through lobbying efforts that shaped zoning laws in their favor, through tax structures designed by and for the wealthy, through a media narrative that tells you homeownership is the American dream while systematically making that dream harder to achieve. You've probably felt this in your own life, even if you couldn't name it. That sense that the system is rigged, that no matter how hard you work, true financial security remains just out of reach, that the rules of the game changed somewhere along the way and nobody bothered to tell you. You're not imagining it. This is Capital Crime Exposed, where money, power, and history collide. And in this series, we're going to pull back the curtain on the real estate industrial complex that has quietly reshaped the global economy while most people were too busy paying their mortgages and notice. What we're about to explore goes deeper than headlines about housing affordability or gentrification debates. We're going to trace the money, follow the power structures, and expose the hidden mechanisms that determine who wins and who loses in the great property game. We're going to name names, examine the historical forces that created the system, and ultimately ask a question that very few are willing to confront directly. And before we go any further, I want to pause for just a moment. Because right now, as you're watching this, I know there's a good chance something I said has already resonated with you on a personal level. Maybe you felt that invisible weight, the sense that no matter how many payments you make, true ownership keeps slipping through your fingers. Maybe you've watched your rent increase year after year and wondered who's really benefiting from your hard work. Maybe you've tried to buy a home only to find yourself outbid by faceless investors with cash offers you could never match. If any of this strikes a chord, I want to hear from you. Drop a comment below and tell me your story. What's been your experience with the housing market? Have you felt like the game is rigged against ordinary people? Your voice matters here, not just to me, but to everyone watching. Because when you share your experience, you're letting someone else know they're not alone. You're creating a community of people who are waking up to the same uncomfortable truths. And here's the thing, this kind of content doesn't get pushed by algorithms. Videos that challenge powerful institutions, that question the financial systems we've been told to trust, they don't get the same promotional love as entertainment clips or celebrity gossip. That's just the reality of how these platforms work. So if this message resonates with you, if you believe more people need to hear this, hitting that like button genuinely makes a difference. It tells the algorithm that this content deserves to be seen. It helps push this message beyond the small circle of people who already stumbled upon it. And if you're new here, if this is your first time watching Capital Crime Exposed, consider subscribing. Not because I'm asking for a favor, but because what we're building here is bigger than any single video. We're creating a space where money, power, and history are examined with the scrutiny they deserve. A space where uncomfortable questions aren't just welcomed, they're necessary. Every new subscriber strengthens this community and sends a clear signal that people are hungry for truth over entertainment, for depth over distraction. Your participation here, whether it's a comment, a like, or a subscription, is what allows this channel to keep going, to keep digging, to keep exposing what others won't touch. It's how we reach more people who need to hear this. It's how we build something meaningful together. Now, with that said, let's dive deeper into the machinery behind this invisible architecture. Now I want to go even deeper into this subject, because to truly understand the invisible architecture controlling the housing market today, we need to travel back in time. We need to examine the moment when everything changed, the precise historical turning point when homes stopped being places, where families built their lives and became something else entirely. Something colder. Something engineered not for shelter, but for profit extraction on a global scale. The transformation didn't happen overnight. It was gradual, deliberate, and largely invisible to the average person. But if you trace the origins of our current housing crisis, you'll find yourself standing in the early 1980s, watching a fundamental shift take place behind the scenes of American finance. This is where the hidden truth begins to emerge. Before this period, the relationship between homeowners and banks was relatively straightforward. You took out a mortgage from a local bank. That bank held your loan. They had a vested interest in making sure you could actually afford your payments, because if you defaulted, they carried the risk. There was a human element to the transaction. Your banker might have lived in the same town, attended the same church, sent their kids to the same schools. The system wasn't perfect, but it had an inherent accountability built into its structure. Then came securitization, and with it, a complete transformation of how housing was understood by the financial industry. Here's what happened. Wall Street discovered that if you took thousands of individual mortgages and bundled them together, you could create a new financial product. These bundles could be sliced into different risk categories and sold to investors around the world. Suddenly, your monthly mortgage payment wasn't just going to a bank down the street. It was being funneled into a complex web of investment vehicles, pension funds, hedge funds, and sovereign wealth funds operating from New York to London to Singapore. This was a revelation for the financial world. Housing had always been seen as stable, as boring even. But the decision to transform mortgages into tradable securities changed everything. Your home was no longer just a home. It was raw material, a commodity to be processed, packaged, and sold on global markets. The journey from shelter to asset class was complete, and most families had no idea it had even happened. The impact of this shift cannot be overstated. When banks realized they could immediately sell off the mortgages they issued, something crucial was lost. That accountability I mentioned earlier. Gone. Banks no longer cared whether you could truly afford your payments over 30 years because they were on holding the loan for 30 years. They were selling it within weeks, pocketing their fees, and moving on to the next transaction. The incentives became misaligned in ways that would eventually prove catastrophic. But the revelations don't stop there. The same financial engineering that transformed mortgages into securities was soon applied to something even more profitable: rent. Think about it from an investor's perspective. Rental payments represent a constant, reliable cash flow. People will sacrifice almost anything to keep a roof over their heads. They'll cut back on food, on healthcare, on savings, but they'll pay that rent. For Wall Street, this was pure gold. Rental income became the perfect foundation for new financial products, for new ways to extract wealth from ordinary people's basic need for shelter. The mindset driving these decisions was never about creating homes or building communities. It was about yield, about returns, about transforming human necessity into investor profit. And once that mindset took hold in the corridors of power, there was no going back. The ambassadors of global finance had discovered a mechanism that would reshape cities, displace families, and concentrate property ownership in fewer and fewer hands. What we're witnessing today, the unaffordable housing, the corporate landlords, the sense that the American dream of homeownership is slipping away, these aren't new problems. They're the inevitable consequences of decisions made decades ago. The architecture was built in the 1980s. We're just living inside it now, often without realizing that the walls around us were constructed by people who never intended for us to own them. Now I want to go even deeper into this subject, because understanding the origin is just the first step. What matters is seeing how this historical transformation created the specific mechanisms that continue operating today, silently determining who gets to own property and who remains trapped in a cycle of rent extraction forever. If you're starting to see the connections, if this is beginning to reshape how you understand the housing system, drop a comment below with just 2 words. Now I see. The history lesson is essential, but now I want to go even deeper into the subject by examining what's happening right now, in this very moment, while you watch this video. Because the financial engineering of the past didn't just create a system, it birthed a machine. And that machine has evolved into something far more sophisticated, far more powerful, and far more invisible than anything those 1980s Wall Street bankers could have imagined. Let me introduce you to the modern owners of your walls. Not your landlord, the person whose name might appear on your lease. I'm talking about the entities behind that landlord, the invisible hands that actually control the property, set the rent, and extract the profit. Names you may have heard in passing, but never truly understood. Blackstone, Vanguard, Invitation Homes, American Homes 4 Rent. These aren't just investment firms. They're megastructures of global capital that have quietly purchased entire neighborhoods, entire zip codes, entire regions of the country. The scale of this consolidation is staggering once you start paying attention. In the aftermath of the 2008 financial crisis, a crisis, by the way, that was directly caused by the mortgage securitization system we just discussed, these institutional investors swooped in with billions of dollars in cash. While ordinary families were losing their homes to foreclosure, while communities were being devastated by the economic collapse, these funds saw opportunity. They bought distressed properties by the thousands. Single-family homes that once represented individual family dreams became line items in massive portfolios, managed by algorithms and quarterly earnings targets. Here's where the hidden truth becomes almost surreal. Many of these institutional landlords don't set rental prices the way you might imagine. There's no property manager sitting down and thoughtfully considering what's fair for the local market. Instead, there are sophisticated algorithms, automated systems that analyze market data, competitor pricing, tenant behavior patterns, and demand signals in real time. These algorithms are designed with one objective: maximize extraction. They calculate precisely how much they can charge before tenants break. They coordinate pricing across thousands of properties simultaneously, creating what critics have called a form of algorithmic collusion that would be illegal if humans did it in a smoke-filled room. The revelations get darker when you understand the fundamental paradox driving this entire machine. Traditional economics would suggest that if housing becomes too expensive, demand would fall, prices would drop, and the market would correct itself. But here's the twisted logic of financialized housing. The more unaffordable homeownership becomes, the more profitable the rental business grows. Every family priced out of buying a home becomes a captive renter. Every young person who can't save for a down payment becomes a reliable source of monthly cash flow for institutional investors. The machine feeds on the very crisis it creates. This is where we need to talk about something that doesn't get nearly enough attention: the behind-the-scenes machinery of power that keeps this system running smoothly. Because these massive investment funds don't just play by the rules, they help write them. The lobbying budgets of companies like Blackstone run into the tens of millions of dollars annually. They employ armies of lawyers and former regulators who know exactly how to shape policy in their favor. They fund think tanks that produce research justifying their practices. They cultivate relationships with politicians on both sides of the aisle. This phenomenon has a name: regulatory capture. It describes what happens when the agencies created to regulate an industry become dominated by the very interests they were supposed to oversee. And in the housing sector, regulatory capture is nearly complete. The decisions being made about zoning laws, tenant protections, tax policies, and investment regulations are being heavily influenced by entities whose sole purpose is to extract maximum profit from your need for shelter. The impact of all this extends far beyond individual rent payments. It reshapes cities. It drives gentrification. It displaces communities that have existed for generations. It creates a new class system where property owners accumulate wealth while renters remain trapped in a cycle that was deliberately designed to keep them paying forever without building equity. And the most insidious part, most people have no idea this is happening. The transformation occurred so gradually, so quietly, that it feels like the natural order of things. We've been conditioned to blame ourselves, to think that if we just worked harder, saved more, made better decisions, we could escape. But the architecture was built to ensure that escape becomes increasingly impossible for the majority while remaining extraordinarily profitable for the few at the top. If this is opening your eyes to forces you never knew existed, comment below with just one word: exposed. Now I want to go even deeper into the subject, because everything we've discussed so far, the history, the institutional players, the regulatory capture, might still feel somewhat abstract. It might feel like something happening in boardrooms and government offices, distant from your daily life. But here's where the hidden truth becomes painfully personal. Here's where the machinery we've been examining reaches directly into your wallet, your stress levels, your ability to plan for the future. Let's talk about how your rent is actually determined. Because if you've experienced that sinking feeling when your lease renewal arrives with yet another increase, if you've watched your housing costs climb year after year while your income barely keeps pace, I want you to understand something crucial. This isn't random. It isn't the invisible hand of a free market finding natural equilibrium. It's a deliberate, calculated, technologically sophisticated system of extraction operating right beneath your feet. Remember those algorithms I mentioned earlier? Let me explain exactly how they work, because the revelations here are genuinely disturbing. Major institutional landlords use software, and one of the most notorious is called RealPage, that aggregates rental data from millions of units across the country. This software doesn't just analyze the market, it actively coordinates pricing decisions. It tells landlords exactly how much to charge, and because so many properties are feeding data into the same system and receiving the same recommendations, the result is something that looks remarkably like price fixing. Think about what this means in practical terms. It's as if every real estate agency in your city sat down in a room and agreed to raise prices together, eliminating competition and ensuring that renters have nowhere to turn for a better deal. If human beings did this openly, it would be illegal collusion. But when it's mediated through an algorithm, when the coordination happens through shared software rather than handshakes, it exists in a legal gray zone that regulators have been slow to address. The transformation of explicit conspiracy into algorithmic coordination is one of the most significant and least understood developments in modern housing. The impact on ordinary families is devastating. Every percentage point increase in rent represents real decisions people have to make. Do I cut back on groceries this month? Do I skip that doctor's appointment? Do I tell my kids we can't afford their school activity? These aren't hypothetical trade-offs. They're happening right now in millions of households because a software system determined that the market could bear a little more extraction. But here's where the logic becomes truly perverse, where the mindset driving the system reveals its most cynical face. You might assume that landlords want to fill every unit, that vacancy is bad for business. In a normal market, that would be true. But in the world of financialized housing, keeping some units empty can actually be more profitable than renting them out. This is the logic of artificial scarcity, and it turns everything you thought you knew about supply and demand on its head. When institutional investors control enough properties in a given area, they gain the power to manipulate the market itself. By strategically keeping certain units vacant, they constrain supply and push prices higher across their entire portfolio. The revenue lost on empty apartments is more than compensated by the increased rents they can charge everywhere else. It's a calculated decision run through financial models, optimized for maximum extraction. This is why you might walk through neighborhoods and see brand new apartment buildings sitting half empty while people sleep in cars or crowd multiple families into single units. It's not a paradox, it's architecture. The system wasn't designed to house people, it was designed to generate returns for investors. And sometimes, the most profitable strategy is ensuring that not everyone who needs housing can access it. I want you to sit with that for a moment. We've built a housing system where scarcity is a feature, not a bug. Where your struggle to afford rent isn't an unfortunate side effect, but a designed outcome. Where the very desperation that keeps you up at night is being monetized by entities you will never meet, making decisions through systems you'll never see. This isn't about bad luck or poor choices. It isn't about working harder or being smarter with money. The journey toward understanding housing in America requires accepting an uncomfortable truth. The game is structured so that most players lose, and that losing is what makes the game profitable for those who control the board. If you've ever felt like the system was working against you, like no matter what you did, housing security stayed just out of reach, type in the comments. It's not luck, it's design. Now, I want to go even deeper into this subject, because we've arrived at the part of this journey where all the threads we've been following finally converge. The history, the algorithms, the institutional investors, the artificial scarcity, these aren't isolated phenomena. They're components of something larger, something that operates with the full protection of law and the blessing of government. What we're looking at isn't a conspiracy hidden in shadows. It's a conspiracy conducted in broad daylight, written into legislation, defended by armies of lawyers, and presented to the public as sound economic policy. Let me walk you through the behind-the-scenes machinery that makes all of this not just possible, but perfectly legal. Start with zoning laws, those mundane-sounding regulations that determine what can be built where. On the surface, zoning seems like reasonable urban planning. But in practice, it thus become one of the most powerful tools for maintaining housing scarcity and protecting property values for those who already own. Wealthy neighborhoods use zoning to block apartment construction, to prevent affordable housing developments, to ensure that the supply of homes never catches up with demand. Every restriction, every requirement for minimum lot sizes or parking spaces or setbacks is another barrier keeping housing expensive and exclusive. Then consider tax policy. The revelations here are particularly infuriating once you understand them. Institutional investors enjoy tax advantages that ordinary homebuyers can only dream of. They depreciate their properties, deduct their expenses, structure their holdings through REITs that pay minimal corporate taxes, and sometimes pay lower effective tax rates than the families renting from them. The tax code has been carefully crafted through decades of lobbying and campaign contributions to favor those who treat housing as an investment vehicle over those who simply need a place to live. Privatization adds another layer to this architecture. Functions that were once public responsibilities, maintaining affordable housing stock, providing rental assistance, even managing public housing itself, have increasingly been handed over to private entities, motivated by profit rather than public good. The transformation of housing from a social necessity into a market commodity wasn't an accident or a natural evolution. It was a policy decision made by legislators who received substantial support from the industries that would benefit most. And this brings us to the hidden truth that connects everything. There is no market failure here. The housing crisis isn't a bug in the system that policymakers are struggling to fix. It is the system working exactly as designed. Every law, every regulation, every tax provision has been shaped by interests that profit from housing being expensive, scarce, and treated as an investment rather than a right. The people making these decisions aren't incompetent. They're serving their actual constituents, and those constituents aren't you. I want to share a phrase that keeps echoing in my mind as I research these topics. Organized crime didn't inspire Wall Street, it was absorbed by it. Think about what traditional organized crime actually does. It extracts money from communities through control of essential services. It uses intimidation and market manipulation to eliminate competition. It corrupts political systems to protect its operations. It operates through complex organizational structures designed to obscure accountability. Now look at the modern housing industry. The parallels aren't metaphorical. They're structural. The same functions, the same outcomes, the same extraction of wealth from vulnerable populations. The only difference is that one operates outside the law and the other has rewritten the law to accommodate its operations. This is white-collar crime elevated to the level of public policy. It has extraction mechanisms so thoroughly embedded in our legal and financial systems that we've stopped recognizing them as predatory. We've been taught to see rising housing costs as natural, as inevitable, as simply the way markets work. But markets don't exist in nature. They're created by rules, and those rules are written by people with interests, and those interests have been overwhelmingly aligned against ordinary families trying to secure stable housing. The impact extends far beyond individual financial stress. Control over housing has become a new frontier of geoeconomic power. Nations and sovereign wealth funds now view residential property in major global cities as strategic assets. The decisions about who can afford to live in New York or London or San Francisco are increasingly being made in boardrooms in Dubai, Beijing, and Riyadh. Your ability to remain in your community has become a variable in calculations about global capital flows and geopolitical influence. This is the full picture. Not a broken system that needs reform, but a functioning system that needs to be seen clearly for what it is. If you're starting to understand that what we call the housing market is really something else entirely, leave a comment with 3 words: the system works. Now I want to go even deeper into this subject, but this time I want to shift the energy. Because if you've followed me this far, if you've absorbed everything we've discussed about the invisible architecture, the algorithmic manipulation, the legalized extraction, you might be feeling something heavy. Maybe anger, maybe hopelessness, maybe a sense that the game is so rigged, so thoroughly stacked against ordinary people, that there's no point in even trying. I understand that feeling, but I need you to hear this. Understanding the system is itself a form of power, and that's exactly where your transformation begins. The hidden truth is that most people navigate the housing market completely blind. They make the biggest financial decisions of their lives, but buying homes, signing leases, choosing neighborhoods, without any understanding of the forces shaping their options. They blame themselves when things go wrong. They internalize failure that was engineered by systems far beyond their control. But you're no longer in that category. The journey you've taken through this video has already changed your position on the board. You can't unsee what you've seen. So let's talk about what this awareness actually means in practical terms. This isn't about becoming paranoid or withdrawing from the housing market entirely. It's about making decisions with clear eyes, understanding where the leverage points are, and refusing to be manipulated by narratives designed to keep you compliant. First, commit to genuine financial education, not the kind sold by gurus promising quick wealth, but deep understanding of how money actually moves through systems. Learn to read the behind-the-scenes signals, interest rate policies, credit cycles, institutional investment patterns. When you understand that housing markets move in predictable waves driven by capital flows and policy decisions, you stop being surprised by crashes and booms. You start positioning yourself accordingly. You recognize when you're being told to buy at the top of a cycle or panic sell at the bottom. Second, deconstruct the myths you've been fed your entire life. The idea that homeownership is always the path to wealth. That's a story that was true for a specific generation under specific conditions that no longer exist for most people. The belief that renting is throwing money away. That ignores the hidden costs of ownership, the opportunity costs of down payments, and the flexibility that renting can provide in an unstable economy. The mindset that says you failed if you don't own property by a certain age. That's conditioning that serves the interests of lenders and sellers, not your actual well-being. Question everything you think you know about housing, because most of it was planted there by people who profit from your beliefs. Third, pay attention to where power actually operates. Local zoning meetings might seem boring, but they're where decisions get made that determine housing supply in your community. State legislation on tenant protections, on tax policy, on corporate ownership of residential property. These are the battlegrounds where the rules of the game get written. The revelations we've discussed aren't just information to consume passively. They're calls to engagement, invitations to participate in the decisions that shape your living conditions. Here's the metaphor I want to leave you with, because it captures something essential about your position in the system. The house may be yours, but the land belongs to the system. The deed might have your name on it. The mortgage might be in your budget, but you're operating within an architecture designed by others, on terms set by forces you're only beginning to perceive. And only those who look beyond the facade, who see past the surface narratives of ownership and freedom, can navigate this terrain with any real agency. This is capital crime exposed, where money, power, and history collide. And if there's one thing I want you to carry from everything we've discussed, it's this. History doesn't repeat itself, but it charges rent. The patterns of extraction we've traced from the 1980s to today aren't ancient history. They're actively shaping your life right now, determining your options, constraining your future. The question is whether you'll keep paying without understanding why, or whether you'll start seeing the architecture for what it is. If this journey has shifted something in how you see housing, money, and power, drop a comment below. Now I see the architecture. And if you made it all the way here, I just want to say thank you. Genuinely, because this wasn't light content. This wasn't entertainment designed to pass the time. This was a deep dive into systems most people spend their entire lives navigating without ever truly understanding. The fact that you stayed, that you listened, that you engaged with these ideas, that tells me something about you. You're not looking for easy answers. You're looking for the truth, even when it's uncomfortable. So here's what I'll say. If this kind of content resonates with you, if you want to keep pulling back the curtain on how money, power, and history shape the world we live in, then subscribing to Capital Crime Exposed just makes sense. Not because I'm asking for a favor, but because this is what we do here. We go where others won't. We ask the questions that get ignored. And every time you come back, we go deeper together. If you want to let me know you made it to the end, drop a comment with just 4 words. I see the game. It's a small thing, but it builds something real, a community of people who refuse to stay blind. And that like button. If this video gave you something, a new perspective, a piece of the puzzle, even just a moment of clarity, tapping it is your way of saying this mattered. That connection we built over the last several minutes, that's what it represents. Now, there's a video waiting for you right here that takes this conversation even further. It connects directly to what we just explored, and I think you're going to find it just as eye-opening. Click on it and let's keep going. I'll meet you there.